Thank you. Mr. Evans, you are now recognized.
Thank you so.
Would you yield?
Yes. Thank you so much, Mr. Evans, and I won't take much of your time. I just wanted to, with unanimous consent, to be able to put something in the record. We have had the National Federation of Independent Business witness here, but the small business majority sort of agrees with the notion of, in line with what the Joint Committee on Taxation has said, that this 199A provision goes largely to higher earning individuals. And so while it might be one of the most important provisions for the reauthorization, it's actually one of the most expensive and really accounts for individual taxes increasing. I just want to point one thing out too. I was around in politics in 1986, the tax reform at that time, and that is when a lot of businesses organized themselves as pass-throughs because they received a benefit even as far back as then. There's no equity issue involved with this overblown 199A benefit. Thank you, and I will yield back to Mr. Evans.
Mr. Duke, I'd like to talk a little bit about the Earned Income Tax Credit. I believe that the Earned Income Tax Credit is the most important tool we have in tax space to reduce poverty. It has been active in introducing legislation to expand and to improve. Although this credit normally is of bipartisan support, Republicans did not use the opportunity in the last 2017. Meanwhile, Democrats have passed legislation in 2020 to expand the last credit to more individuals and help lift more people out of poverty. So could you speak to that issue, please?
Yeah, so, as you know, the Earned Income Tax Credit is just hugely important for American families. It's our second largest anti-poverty program after Social Security. And, Paul Ryan was actually a huge supporter of expanding it for childless workers. But they failed to do that in 2017. And again, that is the group that the tax code taxes into poverty or deeper into poverty. At the same time, one of the pay-fors for the tax legislation was changing the inflation index, which sounds very nerdy, but gets important, for how we calculate the Earned Income Tax Credit.
Mr. Duke, the Joint Committee on Taxation says that under the last Republican tax bill of $6 billion, less on improved income tax credit was paid out prior to the bill. Can you please describe why?
Yeah, so they use the budget reconciliation process, which means that you can't increase deficits outside of 10 years, because when you do a party line vote, you have to use reconciliation, right? And what that means is they needed a pay-for their permanent corporate tax cut. There were two pay-fors. There was cutting healthcare by eliminating the individual mandate in the Affordable Care Act, and then there was changing the inflation index by which we adjust all of our tax parameters in the tax code for inflation, including the Earned Income Tax Credit. Now, for some provisions, maybe that's fine because the individual tax rates gives them still a tax cut. But for really low wage workers who don't pay normal income taxes, they didn't get that benefit, but they see a slower growth and frankly a real cut in their Earned Income Tax Credit. So in that sense, the reduction in the Earned Income Tax Credit helped pay for the permanent corporate tax cut.
One last real quick piggyback a little bit. Under the Republicans' current plan for their tax bill extensions, would this problem get worse?
I haven't heard, what the plan is to do on, the Earned Income Tax Credit. Again, I think they're kind of leaving it behind. But again, I haven't heard any, any tax cuts for, those super low wage workers who are making $14,000, $15,000 who aren't paying federal income taxes. Again, that's why the American Rescue Plan expansion was so important. It tripled the size of the Earned Income Tax Credit for those folks so that we stop taxing low wage workers without kids into poverty or deeper into poverty.
Thank you, Mr. Duke. Thank you, Mr. Chairman.
Thank you.